Investing in real estate, particularly in rental properties, has long been a proven method for building wealth and generating passive income. With the right strategy and knowledge, creating a portfolio of rental properties can provide long-term financial security and a steady cash flow. In this video, we'll break down the process of building a rental property portfolio, offering practical steps and tips to help you succeed in real estate investing. 1. Understand the basics of real estate investing before diving into building a rental property portfolio. It's essential to understand the basics of real estate investing. A rental property portfolio refers to a collection of properties you own and rent out to tenants in exchange for monthly income. Each property generates cash flow, allowing you to grow your wealth over time. Real estate investing has several advantages, such as passive income. Rental properties generate monthly rental payments, which provide a consistent income stream. Appreciation. Over time, properties tend to increase in value, allowing you to sell at a higher price or leverage equity for further investments. Tax benefits. Owning rental properties can offer various tax advantages, such as deductions on mortgage interest, maintenance, and property management costs. However, like any investment, real estate comes with risks. It's crucial to evaluate potential challenges, such as market volatility, maintenance expenses, and tenant-related issues. By understanding the fundamentals, you can make informed decisions and maximize the profitability of your rental portfolio. 2. Establish your investment goals. Setting clear investment goals is the first step to building a successful rental property portfolio. Consider what you want to achieve through real estate investing. Do you want to generate long-term passive income, retire early, or create a nest egg for future generations? Defining your goals will shape your investment strategy and help you stay focused. Additionally, consider your risk tolerance and time horizon. Are you willing to invest in properties with higher potential returns, but also higher risks? Or would you prefer more stable, lower-risk properties that generate consistent cash flow? Having a clear plan allows you to navigate the complexities of the real estate market with greater confidence. 3. Choose your real estate market wisely. The success of your rental property portfolio largely depends on the location of your investments. Choosing the right market is crucial, as different regions have varying levels of demand, rental rates, and property appreciation potential. When selecting a market, look for the following factors. Job growth and population increase. Cities and neighborhoods with strong job markets and growing populations tend to have higher demand for rental properties. Affordability. Focus on areas where property prices are relatively low compared to rental income, allowing for better cash flow. Rental demand. Research whether the area has a steady demand for rental properties, such as college towns, metropolitan areas, or vacation hotspots. Future development. Check for any planned infrastructure or development projects, as they can increase property values over time. By carefully analyzing market trends and conditions, you can identify areas that offer the best return on investment for your rental portfolio. 4. Financing your rental properties. Once you've identified your target market, the next step is financing your rental property purchases. There are several ways to fund real estate investments, and the best method depends on your financial situation and investment goals. Conventional mortgage. Most investors start with a conventional mortgage, requiring a 20 to 30% down payment. Ensure your credit score is in good shape and you have sufficient savings before applying. Private lending. If you have difficulty qualifying for a conventional loan, consider working with private lenders. These loans may come with higher interest rates, but they offer more flexibility. Hard money loans. Hard money loans are short-term, high-interest loans often used by investors who plan to renovate and sell or refinance properties quickly. Owner financing. Some property owners may offer owner financing, allowing you to pay for the property over time without going through a traditional lender. Using leverage wisely is key to building a profitable rental property portfolio. Always ensure your rental income covers mortgage payments, property taxes, insurance, and maintenance costs. 5. Start with one property and scale gradually. Building a rental property portfolio takes time, patience, and strategy. It's often best to start with a single property to gain experience and minimize risk. Once you've successfully purchased, managed, and rented your first property, you can reinvest the profits into acquiring additional properties. As you scale, consider diversifying your portfolio. You might invest in different types of properties, such as single-family homes, duplexes, or even commercial properties. By diversifying, you can reduce risk and tap into various market segments. Single-family homes. These are popular among beginners as they are easier to manage and tend to have a stable rental demand. Multi-family properties. Multi-unit buildings, such as duplexes or triplexes, can generate multiple streams of income from a single property. Commercial properties. Once you've gained experience, you may consider commercial real estate, such as office spaces or retail stores, which often provide higher rental income but come with more complex management. Scaling your portfolio gradually allows you to learn from each investment and avoid overextending your finances. 6. Focus on cash flow and ROI when building a rental property portfolio. The primary focus should be cash flow and return on investment, ROI. Cash flow refers to the money left over after you've paid all property-related expenses. Positive cash flow is essential for sustaining your portfolio and reinvesting in future properties. To calculate your ROI, consider factors such as purchase price. Ensure you're buying properties at a price that allows for a reasonable return. Rental income. Estimate how much rent you can charge based on the local market and demand. Expenses. Factor in costs like mortgage payments, property management, maintenance, property taxes, and insurance. Regularly analyze the financial performance of your properties to ensure they're meeting your cash flow and ROI expectations. If a property isn't generating the expected returns, you may need to make improvements or consider selling it. 7. Manage your properties effectively. Effective property management is crucial to maintaining your rental portfolio's profitability. Whether you manage the properties yourself or hire a property management company, it's essential to ensure tenants are happy, maintenance issues are addressed promptly, and rent is collected on time. Consider these tips for managing your rental properties. Screen tenants carefully. Conduct thorough background checks, credit checks, and reference checks to ensure you're renting to responsible tenants. Keep up with maintenance. Regular maintenance prevents costly repairs and keeps tenants satisfied. Hire a property manager. If managing multiple properties becomes overwhelming, consider hiring a property management company to handle day-to-day operations. By keeping your properties in good condition and maintaining positive relationships with tenants, you can ensure consistent rental income and minimize vacancies. 8. Stay informed and adapt to market changes. The real estate market is constantly evolving, and successful investors must stay informed about market trends, economic shifts, and regulatory changes. Keep up with news, join real estate investment groups, and continue educating yourself on best practices for property management and investing. As your portfolio grows, it's also essential to adapt your strategy. For example, you may want to consider selling underperforming properties or refinancing to access equity for new investments. Flexibility and staying proactive will help you navigate the ups and downs of the real estate market. Thank you for watching this video on how to build a rental property portfolio.